Well, I think you can't really underestimate the significance of the spot ETFs. It's not unreasonable to suggest that this may be the biggest development on Wall Street in 30 years. I mean, the last thing that was this consequential was the creation of the S&P index and the ability to invest in all 500 S&P companies via one trade at the same time. So this is very eagerly anticipated, but most of the money in the Bitcoin market right now is the hodlers and the traditional crypto investors. Mainstream investors, mainstream retail, mainstream institutions have not had a high bandwidth compliant channel to invest in this asset class until these spot ETFs. So I think in January, the approval of the spot ETFs is going to be a major catalyst that's going to definitely drive a demand shock. And then that will be followed in April with a supply shock because there are about 900 Bitcoin a day available for sale by natural sellers, the miners. And that number is going to be cut to 450 Bitcoin a day in April. So it's a pretty big deal.
And that puts Bitcoin where a year from now?
Higher.
How much?
We could probably keep a bunch of economists and modelers working all day long to calculate the supply, demand, and price elasticity of this. I don't think we've ever seen, a 2 to 10x increase in demand combined with a halving and supply in a scarce, desirable asset that people want to hold for a long period of time. So I think we're expecting 2024 is going to be a major bull run for the asset class. We just don't know how far the asset's going to run at this point. The ETFs are unlevered and they charge a fee. MicroStrategy is an operating company, so we're fairly unique because we can generate additional Bitcoin via our operations, either via P&L operations or capital markets operations. And we can take advantage of intelligent leverage. Like we can borrow money at 0% interest for many, many years. And we did that with a convert, and then we can use it to buy Bitcoin. So you can really think of the ETFs as like shipping lines, very efficient, long haul, carry a lot of capital. MicroStrategy is more like an airline. We don't have the cargo capacity in our capital structure that a container ship has, but we can go faster and we have higher performance. So we provide you leverage and we don't charge a fee. And so if you can dig into our capital structure, you get comfortable with that. We offer sort of a high performance vehicle for people that are Bitcoin long investors. Well, we will absolutely continue to acquire Bitcoin. Our strategy is to acquire and hold the Bitcoin, and we will acquire it by a variety of different means as long as they're accretive to our shareholders. So our goal is always to find a way to pursue more Bitcoin per share for our shareholders. And sometimes we do it with debt, sometimes we'll do it with equity, sometimes we'll do it with cash flows from the business. And of course, the volatility in the market just creates more opportunities for us as an operating company. And our particular business strategy allows us to harvest that volatility to the benefit of our shareholders. I think fair value accounting is a giant step forward for the industry. And up until now, corporations have had to invest all of their spare treasury reserves in sovereign debt. Sovereign debt normally has a compound annual growth rate of a few percent. The cost of capital for most companies is 10 to 12%. Bitcoin's got a compound annual growth rate of 40+% over the past 4 years, and even higher in the more distant past. So having a digital money like Bitcoin as a treasury reserve asset allows you to beat the cost of capital, and it turns your balance sheet into an asset instead of a liability. So we think this is a real game changer for corporations. I think that we'll wait for our finance people to give us that recommendation. I do think that the fair value accounting guidelines from FASB are just going to be good for the industry in general. They'll provide more transparency, and they'll be good for Bitcoin as an asset class and for Bitcoin as a treasury reserve asset for companies that have large cash flows that they want to carry forward.
We have, I think, somewhere between 8 and a dozen filings in front of this agency with regard to exchange-traded products around Bitcoin. And the staff of the various divisions respond when market participants have filings We also had a court case earlier this fall in this regard. And so we do things according to our authorities and how courts interpret our authorities. And that's what we'll do here as well.
What's up, Money Talkers? We've got the latest scoop on the crypto roller coaster. Smash that like button, subscribe, and let's dive into the wild world of Bitcoin. Michael Saylor, the big brain behind MicroStrategy, just dropped a bomb. He's predicting a demand shock of cosmic proportions if the SEC gives the green light to the spot Bitcoin ETF in January 2024. Get ready for a roller coaster, my friends. But wait, there's more. Saylor's not just playing with ETFs. He's got his eyes on the Bitcoin Halving event in 2024. It's like a supply shock extravaganza. Imagine the rate at which new Bitcoins are created getting slashed in half. Boom. Bitcoin's value and scarcity go through the roof. It's like the halving is the secret sauce to the ETF explosion. Saylor made a bold comparison. He likened the impact of the Bitcoin ETF approval to the launch of S&P 500 index funds. He's basically saying, brace yourselves for a financial revolution. While Saylor's painting this bullish masterpiece, MicroStrategy, the Bitcoin whale, isn't sitting idle. They've been stacking sats since 2020, and with the recent shopping spree in November 2023, they've got a whopping 158,400 Bitcoins in their treasure chest. Talk about crypto wealth. Now, here's the behind-the-scenes drama. The SEC and spot ETF filers are having a crypto tango. With 24 meetings in the bag, it's like they're rehearsing for the big show. All signs point to a potential ETF approval before January 10, 2024. Are we on the verge of a crypto breakthrough? As we stand on the edge of 2024, the crypto universe is buzzing. Saylor's words hang in the air, and the industry is on the edge of its seat. Will the ETF and the halving tag team launch Bitcoin into the mainstream stratosphere? Brace yourselves, crypto warriors, for a potentially game-changing moment in Bitcoin's saga. Now, let's continue our discussion with Michael Saylor.
Bitcoin is economic armor, right? When you think about it, we talk about it. If you think long enough, it is economic armor. It will protect you from the economic wars to come, and there really isn't much else that will. Now, let me just spend a few seconds or a few minutes on counterparty risk, and then I'll wrap up here. Whatever you do, just make sure you don't lose the money, right? This is common sense. So when you're actually making a decision, an investment decision, you've got two things to decide. One thing is, what asset do I buy? And the second is, how do I custody the asset, or how do I avoid losing the asset? It's not enough just to buy the Bitcoin. You actually have to make sure that no counterparty steals, loses, or destroys your Bitcoin. So when you think about counterparty risk, your wealth can be impaired by the failure of any counterparty you're required to trust. And so there are three broad categories of counterparties everybody has to deal with. People, you're a counterparty, your family, your friends, trustees, people you trust, your lawyers, your accountants, your money managers, your employees, executives at a company you work at. They're all people, right? And you have to trust them. You also have to trust corporations, the issuer of the asset, the producer of the product, a trader, a developer, the custodian, the bank, the exchange, the network. If you own a stable coin, you're trusting the issuer of the stable coin, you're trusting the network the stable coin trades on, you're trusting the crypto exchange that holds the stable coin, and then you're buying a stable coin that represents probably the dollar, which is going to lose 99.9% of your money over 100 years. So it's a bad asset, in my opinion, over the long term, and you're going to have a bunch of counterparties, and you have to understand them all. So keep in mind that you're always trusting counterparties. They're either people, or they're corporations, or they're governments. You have a building, the district can rezone the building. The mayor can rezone the building and seize the building. The state, the province can seize the building. The government, is a counterparty. The federal agencies are counterparties. International agencies are counterparties. So when you're thinking about whatever you're owning, whether it's a building or a piece of art or a bar of gold or a stock or Bitcoin or a stable coin or a crypto asset of some sort, whatever it is you own, you only are going to get the return if none of these counterparties fail you. And so first thing to do is make sure you understand who your counterparties are. The next thing you got to do is manage your counterparty risk. Over a long enough timeline, every person, every corporation, every government will fail.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.